We think anytime you're making an investment decision based off of mixed messages coming out of the White House, specifically on large cap tech stocks, it's maybe not the most prudent strategy from an investment standpoint. We take a more bottoms-up view, and we think the fundamentals of the subsectors and the fundamentals of these companies, specifically the ones I cover in the large cap world of Amazon, Apple, and Netflix, remain strong. And so we think this will prove to be a buying opportunity as we've seen in the past.
So how do you explain Netflix getting whacked the way it did yesterday?
Well, I think there's a couple of things going on with Netflix. You know, in addition to the chatter out of the White House, just the fact that the stock trades at a pretty ridiculous valuation in some people's minds. Not necessarily in our mind. We continue to be very positive on Netflix, but I think that can weigh heavily. Anytime there's going to be a wrinkle in the market, there's going to be more beta around that stock in particular, given the valuation that it trades at.
But I wonder if, in general, that's the kind of thinking that might infect, the group in general, right? I mean, you actually have no real dispute about the strength of the fundamentals in the large consumer internet and tech companies. It's just a question of what you're going to pay for them.
Yeah, I think that's right. And you just have to look at what the opportunities are for future growth over the next several years, and you have to look at specifically what the potential growth rates are. And just focusing again back on Netflix, if you look at the average EPS growth that's built into our model for the next 3 years, we're modeling 75% average EPS growth. So sometimes you look at these valuations and they seem ridiculous, but again, a multiple of 70 times, 60 times, whatever it may be off of next year's EPS, isn't that crazy when you're seeing those kinds of growth rates?
Given Apple's exposure to China, both on the manufacturing and selling side, how do you think about that given the trade issues?
Well, there's no question it's a global economy. We have to certainly take that into consideration. But I think ultimately what's going to drive Apple's stock over the next 12 months is how the iPhone launches fare this fall. iPhone 10 was obviously a bit of a disappointment, and we're going to see what we're kind of calling a wider array of next-gen devices coming over the next few months here. And as that happens,
Michael, the music's playing. We got to go. Thank you.
All right. Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.